Good morning, afternoon, and evening. Welcome to our webcast, Turbocharging Banking with Real-Time Data. This webcast is part of our global thought leadership program, Rethinking. With Rethinking, we strive to bring you a variety of topics facing the financial services industry today, with the help of our subject matter experts, clients, and partners. I'm Robin Zhang, Director of Marketing at Thought Machine North America. Today, I'm very honored to serve as your moderator and being joined by an amazing panel of industry leaders. Before we start, I'd like to go through a few administrative matters. We will be taking questions throughout the webcast. Please use the Q&A window on your online dashboard to submit your question. And we will do our very best to answer all your questions. In any event we run out of time, we will certainly follow up accordingly. And there will be polling questions throughout the session as well. The objectives of these polling questions is simply to encourage audience participation in the discussion. And slides will be sent to you via email after the webcast. Replay will be available online at our Thought Machine Rethinking website, thoughtmachine.net/rethinking. This is also the website where you will find schedule for the upcoming webcasts, as well as other interesting thought leadership assets. Finally, your feedback will be very important to us as we continue to strive to bring to you topical thought leadership. At the end of the webcast, there will be a very brief survey. We'd very much appreciate you staying for a few seconds to provide feedback about the webcast. Now, without further ado, I'd like to bring to you our start panel today. Atul Chandri, Chief Commercial Officer, Managing Director, Boss at Monese. Scott Jarrell, Partner and Forensic Data Analytics Leader at Ernst & Young LLP US. Brian Dempsey, Director of Partnerships at Thought Machine North America. Last but not least, Hassan Maya, CEO and founder at PayBaby. With that, I'd like to turn to our speakers and ask each of you for a very brief self-introduction. Atul, if you don't mind, can I start with you?
Yeah, sure. Hi, great to be here today. I'm Atul Chowdhury. I'm the Chief Commercial Officer of Monese and recently took the title of Managing Director for our new BaaS proposition as well. I've got about 20 years experience in retail banking. Before joining Monese, I was one of the founders and chief commercial officer of Ditto Bank, which was a French neobank owned by Travelex. And Monese, just to give you a quick overview of what the company is, so we are a Europe-wide challenger bank. We serve millions of customers in 31 different countries, in 14 languages, and our primary audience is really people that have volatile incomes. So that's really people that aren't your normally easily bankable people. We give them all of the services they need to thrive in any country that they live in.
Thank you, Atul. Brian, can I pass to you?
Absolutely. Robin did a good job. Intro. So I lead partnerships in North America for Thought Machine. Joined in March when we opened up our New York City office. Prior to Thought Machine, I was at Deloitte Consulting for about 10 years. I helped to drive the next-gen digital banking practice at Deloitte specifically. So worked with big and small financial institutions, helping shape what products to launch in market, what platforms that would be needed to meet those products, and then the underlying implementation of those products as well in those platforms.
Thanks, Brian. Scott?
Hello, everyone. I'm Scott Jarrell. I lead the forensic data analytics practice in the U.S. and also forensic technology in the U.S. Basically have about 22 years of experience focusing on actually a broad array of clients and industries, but more recently in the past 5 to 7 years have been focused on financial services. Excited for the conversation today.
Thanks, Scott. Hassan.
Hi, thank you, Robin, for inviting me. My name is Hassan. PayBaby is a neobank or a digital bank that was started a little over a year ago to focus on the underserved, the Black, brown, and underserved markets. We started from scratch, but to accelerate our market entry, we bought a banking app called Wicked. So Wicked by Banking is it's the first fully operational banking app with deposits and savings accounts here in the U.S. So that's what we're about. And then my background previous to that, I have a long career in both finance and in technology, ranging from once being an auditor and consultant, and then a partner at KPMG, and then working as an entrepreneur and leading venture capital investments at Intel Capital for a division there for many years. So excited to be here. Thank you.
Thank you. Well, thank you, Hassan, Atul, Scott, and Brian. Again, very thrilled to have you here today. Today's webcast is a continuation of a mini-series that focused on the key characteristics of modern core banking systems. In the first webcast, held in July, we went through the evolution of core banking systems and identified a series of key capabilities of a modern core. Last month, we delved into the aspect of cloud native. And today, we will move on to the next key feature, real-time data. For today's webcast, we will start with an overview of how modern core banking systems enable real-time access to data. We will then pivot and spend bulk of the time talking about the benefits of real-time data with the help of our speakers. Now that banks enabled by modern core and modern technology are able to gain access to customer and transaction data in real time, what does it mean to banks and their customers? Our panelists will take us on a journey via their real-world experience and share with us the endless potentials real-time data brings to the industry. Now, I'd like to level set to first and then begin with a definition with the help of our speakers and audience. What is real-time data? How fast does it have to be for data to be in real time? And how modern core banking systems enable real-time data that is different from legacy cores? Before we get to the speakers, I'm going to turn this question first with a polling question to our audience. What is real-time data? Please select one. A, making the data immediately available with 0 seconds of delay. B, passing the data with some delay as a result of travel through various systems. C, minimizing the amount of data in a batch to achieve quicker availability of data. Or D, none of the above. While we wait for the response to come back, I want to put up some definitions I found on the website from some industry publications. I thought it was very interesting. The first one is from Techopedia. The basic definition of real-time data is that it is data that is not kept or stored, but is passed along to the end user as quickly as it is gathered. And real-time data does not promise data within a certain number of microseconds. It just means that the data is not designed to be kept back from us from its eventual use after it is collected. And the next one is from Gartner. The description for an operating system that responds to an external event within a short and predictable time frame. Unlike a batch or time-sharing operating system, a real-time operating system provides services or control to independent ongoing physical processes. It typically has interrupt capabilities and a priority scheduling management scheme. Now, I want to start to turn to our speakers. While all of you have worked very extensively in the banking industry, you also do represent a variety of disciplines. What does real data mean to you in the realm of banking? Do you agree or disagree with any of the above definitions? Atul, if you don't mind, I'll start with you.
Yeah, look, for us, real-time data is essential to everything that we do. I tried to pull out the 3 key areas within us as a fintech where we use data. and real time. So, customer services, we get customers calling us, all the time on different channels. We have to respond to them. We have to check transactions that have probably just happened a microsecond ago. We have to check historical transactions that may have happened 12 months ago, and we need that information to come up almost instantly for us. So, without that, our whole proposition, the whole way that we serve our clients, the amount of resources that we would need to have in place would be significant. And this was challenged quite extensively when we, during COVID, when we all had to work remotely. So we didn't have, access. If I remember in the olden days when all of our stuff was on mainframes, or you had to be available in the office, or you had to sort of go and speak to someone in a branch. But, our whole team was working across multiple countries, and they were able to access that information in the same way. So actually that customer journey was seamless. The other sort of obvious use cases for real-time data that we see as well is in our AML and KYC, and also payments. So as payments are getting faster, faster payments, you now make a payment, and before you've even quite moved your finger off the button, you're seeing the payment landing. So to be able to intercept that payment, to understand it, to put your sort of fraud controls in place and be able to legitimize that payment, you really need to be working at breakneck speed, almost real time. When we're doing sort of AML checks, again, you need to be able to pull historical information from various different sources, potentially even partners, not necessarily even your own infrastructure. You need to bring them in to make calculations. Again, customer experience, if someone's standing there at a point of sale about to make a transaction, it can't take minutes to do. It has to be done in milliseconds. And finally, real-time data is used in our marketing quite extensively. As we understand consumer habits, as we see different trends happening, we need to be able to react to it. There may be outages that are happening through systems. So a lot of the telemetry that we have in place that we can then respond to, and using our socials channels, we can speak to our customers almost in real time as well. So there's sort of three big kind of use cases we see.
Thank you. That's very helpful tool. Scott, can I pass it to you, get your perspective?
Sure. Hey, so yeah, I mean, a lot of what Atul said resonates. What we see, as it relates to the speed of payments, especially the increasing velocity and speed of payments, there's definitely a move towards, de-risking through, multi-factor authentication and, and appropriate controls over data sources, and not to immediately move into risks of real-time data, but Atul sort of touched on it to some extent, and the move to reliance on data sources means that you have to have a plan absent the real-time data, right? So if your data feeds go down, or there's missing data for some period of time, you have to build in some kind of redundancy or plan for when that data is not available on a real-time basis or available at all. So those are just two risks I'd flag, but I think the real-time. I know that in my experience, I've seen practitioners afraid to use the word real-time because it would be milliseconds, not minutes. I think it really depends on the context of the transaction you're looking at or the situation you're looking at. Real-time, would, in my mind, real-time data just allows for course correction of, either fraud or bad behavior or whatever it is you're controlling for, not necessarily instantaneous as I think the first definition here really sort of alludes to. So I'll pause there. Certainly, if there are others who want to add in, but I'll pause there.
Thank you, Scott. Right before I pass it to Hassan, let's see what also the audience think. Elena, if you can push the results back, that'll be helpful. And now I'm turning to you, Hassan, and to get your, what's your definition of real-time data?
Sure. That's so in the banking area, he brought up the three major areas. I would call it, the KYC AML, the payments, and also the marketing. Quickly for us, we're a neobank and we're a mobile-only banking. And one of our advantages is that you can sign up for an account in a matter of a couple minutes, which means that we have, we check software against, we have software that automatically checks, we score you, and we immediately give you a bank account. But there's a large percentage, particularly in our target segment, that have to go through review. And that's related to algorithms and data availability. So that's a challenge that we do have. But the closer to real-time data, the higher percentage of people that we can approve, which is still very good. So KYC AML is a very big part. And we also deal with traditional banks who want to leverage what we have. And they're shocked by the level of speed that we can do versus particularly the smaller community banks who tend to be much more batch oriented. Because their view is you can't approve a customer. They'll say hours or, it's just, and because they said the data is not there. So that's a big one. On payment, we actually have a NFT payment processor where we work with where you can use a credit or debit card. And we have major celebrities that you can buy the NFT. And in a matter of a few seconds, because we work with, a big processor, and people are expected really fast. And then for those who are sophisticated, they go and then they click and they put it in a digital wallet. So all these things are all driven by data and APIs, which is an exciting thing. And then lastly, on the customer service, we do get a number of calls. We have a phone service, and we have a tool that allows to check. We sit on MasterCard, so on the MasterCard rails. So as was mentioned by Atul earlier, that people are expecting their transactions are generally processed within seconds. If they're not, people are calling within seconds. Like, what's wrong? And data is very important. And the faster the data is very important. And so that's key to the success of this industry.
Thanks. If I'm hearing all three of you correctly, right? It is the real-time data, also the definition as far as how many seconds has a lot to do with the context. Now I'm looking at our audience response. It's very interesting. Overwhelmingly, 75% regard real-time data with 0 second of delay. So now we're going to move on. I'm passing you, Brian, because I think you will address that definition in the next slide. Is Brian, in today's, as everybody talked about, giving a definition of real-time data, right? The big data is, in today's world, is often characterized as volume, velocity, and variety, all of which are increasing at a rapid pace. This really begs the question, right? If the established core banking systems cannot achieve real-time data processing, what are the modern core doing differently to get there, especially facing the big data challenge of the digital age? Brian, naturally, given your past role as a management consultant advising banks with their core banking modernization efforts, I'm turning this question to you, Brian.
Yes, absolutely. So if you rewind the clock in our first webcast, we talked about the DNA next-gen banking, and in there we hit on the history of it. So we highlight on the legacy versus the modern core platform differences as it relates to data. I think everyone knows that legacy cores are batch processed. It's usually that's done end of day on the mainframe, while few, if any, other processes are running. Whereas the more modern cores, when you look at them, the fundamental definition from a data standpoint is they're real time. Scott mentioned earlier the zero component piece, which was one of the leading answers. I found that interesting because whether the data is batch versus real time, at the end of the day, you need to know what you want to do with it. And a lot of times you need to aggregate the data, you need to generate the insights, and then specifically, whether it's for a customer or for a bank staff, you need to generate the next best action that can be taken on it to make it really useful. Data is nothing. You need to make it actually useful information to be used. When you look at the modern cores today, so in addition to real-time data, they really have two sets of APIs. It's either RESTful APIs or streaming APIs. They're fundamentally different in their approaches, and they're different fit for purposes that use. So RESTful APIs, it's a popular web architecture, REST is, and there's really 4 architectural constraints that all RESTful APIs have. So I'll go through them briefly. So client architecture, client server architecture. So what that really means is it's a request response paradigm, a application request for information, and then in this example, the core or whatever their downstream application responds back with the necessary information. The other piece, they're stateless, so no client context is stored between the server, on the server between the requests. The third, cacheable, so clients, the system that is making the request can cache the responses, and this has to be declared up front in the API whether or not it can be cached or not. And then the last one is it's a layered approach. So REST APIs, they're obfuscated from the end user. So this type of API can be communicated directly with a server or through a load balancer with the through an intermediary via load balancers. So when you look at RESTful APIs, they're stateless, they're highly scalable, and they're fundamentally flexible in output. They're designed around this request response model, and they're most used in environments where a client is able to request a large range of calls, and the server can respond with a variety, with varied and different data sets. And then when you look at the streaming APIs, they're actually the exact opposite of a RESTful API. They don't use a request response paradigm at all. So they are event-driven. A lot of times Kafka is used to push these events out in market. They handle large amounts of volume. The volume, though, is very much a stateful nature versus a stateless nature from RESTful, and it's very much more structured than a RESTful API can handle, that a RESTful API handles. So typically a client opens up a persistent connection, someone downstream subscribes to that connection, and any event that is triggered, whether it could be account transaction data, that data is fed out live, and that subscriber picks up that information in real time. So I would say streaming APIs have less flexibility in the context versus REST APIs. They have a limited response format, much more structured and rigid, but they are able to handle a large amount of volume. So I would say to wrap up kind of the differences, so REST APIs, they require constant polling of the latest state from the core. And so that is a limitation in general when you hit a core, because if you're constantly hitting it at large scale, you can compromise the performance of your core platform. So that's why when you look at it within and out of core, streaming APIs are allow the data to become made immediately available, and they don't have that pulse that is required from a streaming API. So they're able to update downstream systems real time without that request response paradigm.
Thanks, Brian, for setting the stage for us. Now, I'd like to do a reality check with the help of our audience and speakers as well. As Brian has just shared with us in depth, now real-time data is now possible thanks to technology advancement and modern core. But what is the state of the banking industry? Having a modern core or not, are banks really, how are banks really doing? Are they really gaining real-time access to data? Again, before I put this question in front of the speaker, I'm going to do a polling question to see what our audience think. Here's a polling question number 2. Select one statement that best describes your organization's ability to gain real-time data process. So, Scott, I'm going to turn to you first. You have been specializing in fraud and regulatory compliance risk management for a very long time, and specifically serving financial services clients, as you mentioned in your intro. What is your experience in terms of banks' ability of using real-time data, managing fraud and regulatory risks? Are most of the banks almost there, halfway there, or far from getting there?
Good question. I mean, I think it's sort of, I hate to answer with it depends, but it does kind of depend. It depends on what areas of the bank we're talking about. I think, payments has gotten significantly more sophisticated. And I think that really a result of challenger banks and challenger fintech companies that were able to maneuver banks in legacy, core banking platforms in many cases. I think, thinking through a digitization of the modern core banking platform, moving to, a more microservices-based approach to banking platforms would give the ability to pivot, right? And an example of that I would use is, January of 2020, nobody would have anticipated that COVID would have come down. And then in the US anyway, PPP loans were going to be taking place, and compliance around that funding and potential fraud within that source of funding would happen. I mean, we worked with a couple of large bank clients to work with them to work on PPP loan forgiveness calculators on the fly using real-time data. And because they had digitized portions of their platform, they were able to, to pivot there. Now, any of these processes, and this will be, again, a theme if I answer any of these questions going forward, this will be a theme, but people, processes, and technology are all, you have to bring all of those to bear if you're going to solve a problem. You can't solve a technology problem in and of itself. And without applying appropriate guidelines for both people and whatever the process may be. So I think, because we helped them get that right and they digitized the portions of their platform, we were able to use that real-time data to decision PPP loan forgiveness in a pretty expedited manner. Again, that wasn't seconds because it wasn't a transaction like a payment or a trade that needed to happen in seconds. That was a phone call with a client or a decision SLA with the client to be able to revert back to the customers with a timely decision on what their forgiveness amount, what they were eligible for. So again, it's always going to somewhat depend, but I think the banks are in large part, like I said, due to challenger banks and fintech companies, and in pockets are doing the right thing as it relates to use of real-time data.
Thanks. Now, talking about challenger banks and fintechs, I'm turning to Atul and Hassan. Hassan, Atul, I'm going to start with Atul, if you don't mind. Monese operates millions of accounts across 31 countries. Previously, you talked about what real data means to you. Would you be keen to share with us what Monese does, has done, or to gain ability of real-time data processing? Was it an ability that you had from day one, or was it something that you gained over time?
So I think we launched in 2015. So, we've been around in fintech world, quite a few years. And I think one of the things that we found almost 2 years ago when we were looking at our whole architecture is we'd done what banks had done. So we'd almost built a legacy bank from scratch. You came in with some base requirements, and then we wanted to add another feature, and we did it, and then we added another, and then you ended up with this monolith sort of environment. And that's when we, COVID gave us a unique opportunity, I think, from growing like crazy to take a step back and really look at our architecture and the way that we were going to scale in the future again. So we took that opportunity and actually redesigned our whole back end from the ground up. And, before coming onto this session today, I did ask my CTO the question of, are we using real-time data and have we architected in a way? And he came back with a very complicated response that I don't quite understand. But I think it's fair to say that the way that we've now done it, we are, using a full microservices architecture. We are using asynchronous, it's an asynchronous platform. We have a new data warehouse that all of the data is coming into. We use Kafka. So all of this stuff that we've put into place now, and we've seen the difference. Like our new back office allows us to, get data that we never thought we would be able to in the time that we can. So a full architecting. And I think that's been enabled because technology's moved forward in the last 4 years very significantly. And that's been the biggest enabler for us to be able to really take a step back and build this new platform. So definitely, I think it's, had we not done that, I think we would be in the world of sort of semi-batch, but now we're not.
That's good. Good story. Thank you. Now, Hassan, coming to you. You recently founded PayBaby. Prior to leading a banking institution, you have had extensive experience working with AI and data analytics in other industries, like the music industry. With your cross-industry experience, I'd like to get your thoughts as to how banking as an industry as a whole compare with other sectors when it comes to real-time data processing. What's your thought?
Sure, that's great question. So we're a challenger bank and, we're relatively new. So as Atul said, we have the modern building blocks. So so our banking application is smart. It categorizes your spending. It can figure out where you're spending well or not and all that because of the data that's available. There's another advantage of banking in that most people only care about the most recent transactions. Let me compare that to two prior companies that I helped build. One is a streaming music company, primarily for the non-U.S. markets, is similar to Spotify. And if you look at the music industry, for example, there's 40 million songs and growing all the time with artists who are joining, and so the data, if you look at data, because a song is nothing but data, it's quite different because you're looking at, you're going back potentially 100 years in songs. So you need a much bigger data pool on what the consumer might request. So the challenge shifts in that regard, in that what data is needed real time, what data may not be real time, and what is the turnaround time that is necessary. So when we first built it, we were trying to, create as close to, you click on the song to stream and you can get it immediately. Well, that turns out to be the most expensive thing in the world because then on AWS, you got to have everything real time and you're paying a fortune. So the ideal thing is to make it where it's tiered, everything from, I know that this is going to be requested, 90+% of the time versus the other thing. So the data pools you have to manage between cost and accessibility to the consumer and give them that experience and so that is rapidly changing too because the cost of data and getting it real time is better, but it's still not there, altogether. So in the music industry, which most people now think nothing of it. If you get Spotify or Amazon Music, you just click on the song and you end up listening to it. Generally speaking, but that's not 100% true because it turns out it's an ABC analysis. Almost all people listen to almost all the same songs. So they're told everything's available. That is not totally true. And so the idea of real-time data is most important for the most important, most recent things that you need to do. Whereas in banking, if you don't get something, you'll get pretty pissed off. Like, why can't I get it? Unfortunately, people are just, and even now, if you go to a Chase or whatever, if you want really old, they'll say, we only have X amount real time. The rest, we'll have to fetch it for you within 24 hours. In the case of music, we learn to fetch it faster, but it would it wouldn't necessarily be that. It would be a request, and it would pull it. We'd have data pools, and we had algorithms to determine it. Another area that I built, and this was actually in China, where we called a influencer engine, where we would you could profile. People could profile themselves, and they could join campaigns, like, if they were, selling Revlon cosmetics, and people would, and so the whole idea, advertisers wanted to get real people all the way up to the big influencers. Well, as you can imagine, in a country with 1 billion plus people, if you made all of that data available, that would be challenging. But at the same time, that reach could get to a lot of people. It's it's the Facebook challenge, so to speak. And even there, you don't get everything all the time with people. So real-time data is the closer you get to it, the better people feel. But you have to balance it against what's really necessary, and then also giving the consumer access to everything where they feel like they have control. And for the most part, most consumers only need to see what they're looking at. So it's an architecture question, and we're getting and everything's getting phenomenally better. I mean, every few months. And in our case, in both cases, the big difference now is that you have companies like Google and Amazon, with AWS, and there's this huge industry where I call it's the Lego approach to building real-time architectures, where the building blocks are doing it is not all dependent on the company. Like, we don't have to build that, right? We just know our engineers need to know how to plug into these systems and leverage them, know how to do load balancing, know how to do all of things in a way that they can architect it both to give it as well as manage it against the way us, business people will say it's profitable, right? Where you don't overspend to make everything available.
Thank you, Hassan. That was really interesting. It's so good to have this more of an outside of industry perspective from you. Before I move on, Elena, can I ask you to push the results back from the polling question? Okay, wow, it's very much evenly spread between batch processing to some level of real-time access and to full real-time capability. So this seems to be definitely a progress. Now, with that, I'll move on to the next section of our discussion today is really the benefits of real-time data. With real-time access to data becoming a real reality, thanks to the technology and modern core, what does it mean to the various stakeholders in a banking ecosystem? Again, before I turn the question to our speakers, let's find out what our audience think with the next polling question. Polling question number 3, please identify the 3 most important as benefits of real-time data for your organization. While we wait for the results to come back, I'm going to turn to our speakers now. Brian, if you don't mind, I'd like to start with you. Before we delve into some of the specific examples, can I ask you to give us a high-level summary of the benefits that real-time data brings to both banks and the bank's customers in terms of both business customer as well as consumers?
Definitely. So from a benefit standpoint, it impacts both your top and bottom line growth for financial institutions, as you would expect. So if banks have the data available at the right time, the right data at the right time, then they can understand customer behavior better, they can adapt at speed. So for banks, and this slide sets the stage well, so for banks, that really means potential for additional revenue stream. They can have data-rich prospecting tools to identify new customers, cross-sell, upsell capabilities. They have improved operational efficiencies as batch processing is phased out over time. You can use the real-time data for transaction monitoring to reduce fraud incidents. So some of the use cases that were previously discussed. When you look at it from a customer standpoint, so a lot of the benefits there are really around offering a tailored customer experience and personalized product offering. That could be at the time of onboarding of the customer, or it could be during everyday use of a mobile application in the bank. High-level examples, so from a retail customer, it's all about opening the right account for them that's tailored to them, opening it up in seconds. getting through the KYC process immediately, while also using the data to drive the appropriate KYC decision. And then when you look at small, medium businesses, a lot of times, it's all about your capital. So getting fast access to capital through a quick funding decision and credit decisioning, so you can fund your operations. It's also about how you manage your money. So real-time cash management is also something that small, medium businesses really look for, the data and insights to help action them appropriately in market.
Thanks, Brian. With that backdrop, I'm going to turn to Atul, Scott, and Hassan, and ask you to help us to delve into some of those specific benefits. And I'm going to take 2 rounds. The first round, I'll focus on the benefits to the banks, and the second round will go to the bank's customers. Any real-world experience examples that you can provide will certainly be very helpful. So, Scott, I'm going to start with you. In the world of fraud and regulatory compliance, data is indispensable. In your view, what benefits has real-time data processing brought to your space? Does that fundamentally change how you help financial institutions develop their fraud and regulatory compliance programs? And what impact does it have on the existing programs? Scott?
Yeah, so actually, you referenced earlier, a lot of the technology changes really in the past 3 to 4 years have enabled the use of real-time data in a much more holistic way. But I'll outline sort of 2 use cases which sort of bridge both regulatory compliance and operational efficiency. I mean, there are lots of other benefits too, but one is again related to a bank's protection of their intellectual property. We help them use cybersecurity data, access data, et cetera, to be able to install a data loss prevention or protection program. Excuse me. Basically to identify when potential insiders who may be on their way out of the company are looking to steal intellectual property or unauthorized access to intellectual property. So we basically help them set up a program to do that using, again, real-time data to throw alerts to relatively modest team of reviewers who were able to stand by and flag some intellectual property theft. So again, that's one example that we couldn't have done that 5-6 years ago, and that's using, again, login data. That's all internal data. That's not using third-party data sources or reliance on third-party data sources. That's using internally generated data. Another and probably more relatable example is for some of our work in a commodities trading firm. We help them enhance their trader surveillance program. So leveraging a number of existing tools that they had that were just basically throwing a bunch of false positives, and they had to throw more human capital at solving those problems to clear false positive alerts on their data. We were able to overlay, again, real-time trader communications in their Bloomberg chats, in their internal, chat mechanism, be it Teams or Zoom or otherwise, and their e-communications through their email system. Overlay all of those with their P&L data and real-time markets data to flag trades that were out of their norm for potential market manipulation. Important to note, right, that just because a transaction is flagged does not mean that there's not context for why it occurred. So that's why, I sort of earlier said people, process, and technology. You still need people to be able to contextualize that. And the real-time data is absolutely critical in getting it right. But the real-time data and the algorithm and the system are still not really sufficient to wholly, identify and remediate the issue. It's more identification for further review, and pretty rapid review. I mean, that review can be done, pretty efficiently once the context and the data circumstances are fulfilled. But again, those are sort of two very relevant and recent examples of work that we've done. And that trader surveillance platform, we did that for the commodities. We've done that at a number of different firms globally. And particularly when you get into a larger legacy financial services institution, they've already invested very heavily in these systems. So it's important to think about, I'll say, threading the needle for how you get it right in terms of where you apply the real-time data to tighten up the results, to make their process more efficient and purpose-driven rather than, I mean, of course, the regulations are there for a reason, but you'd rather their energies and efforts be focused on the true problems rather than clearing alerts that are false positives. So that's sort of some perspective that I'd add on how it benefits the banks. I had sort of said to Robin in preparation for this that the benefits to the customers in both of those circumstances are much more incremental and downstream, like pennies worth of savings or theoretical savings, but I think that benefits the broader banking system or financial system.
Thanks, Scott. It's very helpful. Atul, can I turn to you next?
Yeah, I mean, there's a really interesting example of a fintech that I was speaking to the other day. So they are working with Gen Z. And anyone that tries to keep Gen Z engaged in banking has a difficult job. But considering these guys are Gen Z as well, some of the ideas that they're playing with and some of what they're implementing really does go into the benefits of real-time data. So digital banking means that when you're digital first, generally you have a mobile device as the main access point. So what these guys have done is they're using that, and they're using a number of different factors and telemetry that's on the device to help them to give a better customer experience, but also give them an additional revenue stream. So currently they're working with a number of brands. So if you're about to go into a McDonald's with your friends, your phone will automatically, through location, detect that you're about to go into a McDonald's. And then the bank has worked with the other retailers. So suddenly Burger King will send you a push notification to say, hey, instead of walking into McDonald's right now, why don't you come to Burger King and we'll give you 20% off. So that is a fantastic use case that works both for the customer in this instance, but also works for the bank. And it's all been enabled because it is sort of a mobile-first experience. There's a lot of customer information that's available through historical transactions. So they know whether, if 5 times that person's walked into McDonald's after receiving the promotion, then they're probably not going to send it again. So plus the location data, plus all of their partner data that they have on the various offers that are running. So putting all of that together in real time to actually drive value for both the bank and the customer.
That was very interesting story there. Now, Hassan, if you don't mind, I'll come to you next.
Sure. So I'm actually dealing with a live case right now, and that's in the area of fraud. Fraud is one of the biggest issues of a neobank, and in the case of us as a mobile-only bank, one of the biggest things is that people they want to return a deposit, and that's how they commit fraud, and they count on the turnaround time to take advantage of them. So we've been working with, and this is where data comes into play. So we have fraud detection technologies, but typically speaking, it's overnight when we look at the patterns, and there are all kinds of patterns that you could check for. Like fraudsters tend to work in groups. They tend to work within the same IP address. I mean, there are things along those lines. So we're experimenting with a new product. It's called Dynamic Fraud Detection Analysis. And it starts to take the real-time data of what these people are, or what the transactions are within the same IP address, and it's starting to match it and see, is this a potential fraud case or not? Okay, and this becomes possible because the data is there. Okay, otherwise, what happens is if you go, it's sort of like a mobile. Even now, if you try to deposit a check, for example, your mobile check, with a picture of the check, it says it's got to clear because it has to clear through the banking system, which essentially means all the data to figure out if that's not a good check is not there, right? Theoretically, if you're trying to deposit a check or ACH, they should be able to capture the information and see it everywhere, but they can't, right? There's something called real-time same day ACH is the term. They never say real time. And that's an extra fee because it's actually an underwriting as much as it is a data issue, right? They're willing to underwrite the potential losses if in case that's not an acceptable ACH. So it's a data timing issue as well as how you use it. So the next thing that we're actually with this new company is they're like, we have a rules engine, or we use AI, we use artificial intelligence, and we can detect patterns automatically based on your real-time data, and we will improve your ability to either say that as a fraud and put a stop on it, right, or say it goes through. Otherwise, you're going to have to go to these, what you normally use, and either accept, have a higher chance of fraud through the batch, which unfortunately we've had a little of that, or you can lock it down completely and the customer experience goes way down. So this is a big area in banking that I see where the closer we get to real-time data can significantly improve customer, transactions, reduce fraud, and improve, customer experience.
Thank you. So Hassan, thank you. So Hassan, Atul, and Scott, you have talked a lot about some great stories, really great stories about the benefits of the real-time data. I always turn the conversation a little bit to the other side of the story, right? Challenges and risks. We can't live without data, and data is everywhere in today's digital age. Its omnipresence certainly also brings challenges. Given security and privacy are probably the two most pronounced questions facing the industry today. So, Scott, if you don't mind, I'd like to turn to you first, right? As data flow from one enterprise system to the other, sometimes crossing even geographic borders, what advice do you typically give to your to clients, and especially banks, as relates to data protection?
Data protection, obviously anonymization is going to be important, particularly cross-border. With data privacy, it is a complex web, even domestically in the United States, and then you overlay European GDPR requirements and such, and that really becomes quite challenging. I think that real-time data, it's more overlaying. Like once you've figured out your customers and I'll say your entity resolution to understand which customers and families are represented, and people and businesses are represented by which identifiers, which that in and of itself is a challenge from a data privacy perspective. I sort of feel like the two biggest challenges with real-time data are, again, and I sort of alluded to it earlier, but once you rely on real-time data, if you don't have access to real-time data, it's what do you do in lieu of having it? The other risk that I would really flag that that you have to have a plan in place to address it is real-time data is quite voluminous, and so storing that and figuring out what the cadence of storage and the cadence of dispositioning or destroying that data long-term is. And particularly if that's evidence for a decision that you made, on a loan or on a customer interaction, making sure that you've dispositioned that or thought about that in terms of what your long-term data strategy is. Because again, that can be a quite costly side of the use of real-time data. And again, if you're using it referentially, it may not be important, but it could be quite important. If you haven't stored the evidence, and for better or worse, in my business, we often see regulatory inquiries gone wrong because somebody didn't save the appropriate data or evidence of their decision, and you crack open the file again and don't have access to that real-time data anymore. You've got a regulatory issue. So I think those are the biggest risks that I see on a day-to-day basis. But data privacy, like you sort of initially alluded to, Robin, is also one that it takes I'll say a privacy expert and one who is staying up on all the latest and greatest. I mean, these data privacy policies and regulations are changing day to day, even domestically, but also globally. So,
yes, absolutely. Now, Brian, to help put our attendees' minds at ease as relates to the risks, challenges of data, can you share with us the measures that modern core banking systems are also providing to help banks safeguard their data?
Yeah, so Scott hit on a lot of good points there. I would say that modern cores would expect treat data privacy and security very seriously and look at it a couple different ways. So similar to legacy cores, modern cores use user groups, roles, policies, permissions to define what people can access and what they cannot access. In addition, modern cores, since they're all API based, you need to control the API endpoints and the communication with those. So employee service accounts that help manage that system access. And in parallel, you want to know, well, who is accessing those APIs and what effect those APIs are having. So there's a layer of an audit system to track that usage is in place. And typically you'll see modern cores integrate that audit log with the enterprise security management system. And then lastly, I see where the data that is sensitive is any component or any service that hits sensitive data, that is grouped together within containers in the cloud to help control and compartmentalize the access and the sensitivity of that data that's being managed. Obviously, the one big component is that modern cores are in the cloud, so they employ a lot of the native cloud security measures as well. So we mentioned two-factor authentication at the very beginning for users, data obfuscation, tokenization, VPN usage, all one layer of security in place. Data encryption, both in flight and at rest, is used in the cloud, and then securing that ingress and egress point in and out of the cloud, and putting a layer of control over the top of that. And then the other point I mentioned is that a multi-layer security ring that is typically put in place to where only the outer ring within the cloud is accessible to the outside. That's what's closely monitored for external threats. So I would say that modern cores and cloud in general, it's a multi-layer approach. Scott hit on a data privacy expert to keep in tune with some of the latest trends and threats that are being employed in market. And I would also reiterate that is very important with this multi-layered approach that's taken by modern platforms today.
Thank you, Brian. Now we're coming to the very end. We have 2 minutes left. And again, thank you, speakers, for honoring us with your valuable time today to join us. With the webcast coming to an end, I'm going to do a lightning round and ask each of the speaker to offer your parting words for our audience. Whether it is about the work to gain real-time data access or simply to implement certain benefits of real-time data, what advice would you offer to our audience today? And Hassan, if you don't mind, I'll start with you first.
Oh, okay, sure. I would say the closer to real-time data, the better everybody is. Better off everyone is from the banks by being able to offer better services, to give better interfaces, to doing better fraud detection. All those things are better. The biggest risk, of course, is that the closer you get to it, you have to you have the risk. I would say one of the biggest risks is what I call regulatory risk, as well as regulatory worry, because we just went through a regulatory review, and regulators don't tend to move as fast as technology. The technology there, the regulators aren't there, but it's worth it to push that engine and not worry about them, and not you have to worry about them, but to push it, because the benefits are many on the closer you get to real time in every way.
Thank you, Hassan. Atul, next.
So I'll pick up on a point that Scott made. Real-time data right now is relatively expensive, so you need to be very clear about the data that you really need to be real-time. As we get more advanced in computing, then hopefully, at one point we'll have unlimited access to real-time data. But right now, pick what you need to be real-time and base it on your customer journeys and the optimization that you want to do internally.
Thanks, Atul. Scott.
And yeah, it's been an awesome panel. I agree wholeheartedly with what both Hassan and Atul said right there. I just think use of real-time data should just, you make sure you're using it in the right time in the right place, and for the right channel, right? Without the right context, without the right use case, it's going to be an investment that'll go wasted otherwise, right? So just make sure that as you progress into your journey on the use of real-time data, that you're thinking holistically about what you're solving for, starting small, and that sounds, but starting with a manageable scope and then expanding it from there. I think if you do that and you think big picture, but start with small, tangible, measurable steps, I think you'll be in a pretty good spot.
Thank you. Last but not least, Brian.
I think Scott hit on some of what I was going to say. To me, act now. So start small, bite-sized chunks. The competition is intensifying in market. Data is being used in ways we didn't imagine 5 years ago. So the data aggregation, insight generation, and next best actions, that's becoming table stakes in industry. So I would say to someone who hasn't started their journey, Atul hit on, figure out what is most important to you. Is it revenue generation? Is it reducing your fraud losses? Is it streamlining business operations? What do you need data for specifically, and target those areas first and foremost? I would say that the real-time data, the access to it, it all traces back to your core platform and the supporting platforms around it. And without that modern flexible architecture, without modern flexible platforms, you're not going to be able to get the data at hand when you need it. So starting small, bite-sized chunks, start now, and before it's too late. That's what I would be my sounding bits.
Thank you. Thanks all speakers, and thank you audience for joining us. And we hope you find this session helpful and will join us again. And again, you can stay for a few seconds for a very brief survey, and we would very much appreciate that. Thank you, and bye now, and see you again.